someone recommended that you watch this short but highly informative presentation. Now, if you're looking for a safe way to earn mailbox money, and by that I mean money that comes into your mailbox month after month without you doing any work, you're going to love what I'm about to show you today. You're going to learn a strategy to safely and quickly grow your savings or retirement accounts by investing in a little-known real estate niche that can be best described as the best kept secret in real estate. Now, I know this will sound strange, but the best kept secret in real estate is don't invest in real estate. Yeah, really. I'm going to go as far as to say that if you're not a professional investor, you should not invest at all. Don't get me wrong. I'm not saying that you should stuff your savings in a mattress or something, but I'm saying that to safely and quickly grow your savings, you should not invest your money, because investing involves a high degree of risk. You've no doubt heard or read the investment disclaimers. Now here's one. Investing involves a high degree of risk. The investments and services offered by us may not be suitable for all investors. Here's another. Investment involves an inherent risk, and our firm does not provide any guaranteed return on any investments made. Now here's one by BNY Mellon, the most popular mutual fund in America. There is no guarantee that any investment strategy or approach will be successful or achieve any particular level of results. All investment products involve risk of principal loss. Well, this is basically saying that you could lose a lot or all of your money. So I think you guys get it. Now the obvious question is, if I don't invest my money, how can I make it work for me? To answer that, you need to think like a banker. I think we can all agree that banks are masters of money. Perhaps that's why you see the names of banks on the tops of some of the tallest and nicest buildings in town. But here's an interesting fact about banks. Banks don't invest. Think about it. Banks don't invest. Banks lend. Because loan profits are not market dependent. Loan profits are contractual. Someone signs a contract that says, I will pay you back. Now I realize you're not a bank, but I'm sharing this information with you for a reason. So the following are 3 powerful market conditions that have created an opportunity for you and me to profit like bankers. The first of these market forces involves a recent change in the law, which opened the door to a 100-year-old real estate investing submarket that very few people even know exists. So there's very little competition in this lucrative investment niche. The second of these market forces is social. There is a mindset shift taking place in our society. People are waking up to the reality that the financial strategies that work for their parents and grandparents don't necessarily work in today's environment. People are sick and tired of the volatility and high risk associated with the stock market, and they realize that the pathetic interest rates paid by banks doesn't even outpace inflation. And so people are actively entering the world of investing. And by far, the fastest growing investment category is real estate. Now, the third market force is technology and artificial intelligence, or AI. Technology is driving us into an era that I call the age of collaboration. Thanks to tech, people can collaborate on projects anywhere in the country, and we see it happening all around us. Think about it. Uber, Amazon, DoorDash. These billion-dollar companies were not built the old school way. Uber didn't go out and buy 10,000 taxi cabs and hire a bunch of employees. They used tech to collaborate with honest, hardworking, and ordinary people. DoorDash doesn't even own any delivery vehicles, but they earned $8.6 billion in delivery fees last year by collaboration with local people that own cars. We have entered the age of collaboration. It's here. It doesn't matter what your job or profession may be, Each of us needs to decide to get on board the collaboration train or get left behind. Although you and I are not banks, the convergence of these three market forces has opened a door of opportunity for us to perform a very profitable banking function. We can use our savings and retirement accounts to become private lenders. Over the next few minutes, I'm going to show you how you can capitalize on this trend. Whether you're a busy professional, a single mom, or retired, you can become a private lender and safely earn high returns while you collect passive income every month. Now here is how you're going to do it. As I said a few minutes ago, the best kept secret in real estate is don't invest in real estate. Now here's why it's much smarter, much safer, and more profitable to put your money in real estate loans. We call them mortgage notes. You see, as a private lender, you're not subject to market volatility. It doesn't matter if the stock market goes up or comes down because your profits are not based on that. Your profits are contractual. You're going to have a contract signed by somebody that says, I will pay you back with profit, and that's how your money is made. And it's completely passive. You see, this person is paying you back every month, and they're going to pay you back whether you do anything or not. And you won't have to deal with the property they own. You won't have to deal with tenants or toilets or taxes or anything like that. You're going to be profiting from the investor's expertise. You don't need to become an expert in any real estate category yet. You profit from all categories. Your lifestyle will not be interrupted. Discovering private lending was a revelation. Like I'd been on the wrong side of the financial game my whole life. Have you ever felt the same way? It's not your fault. Most of us learned about money from people who didn't have much. But over the last 15 years, successful real estate investors whom Alek hired to mentor him revealed the secrets of true financial stability. While I rode the roller coaster of flipping houses, they showed me the power of becoming the bank, a private lender backed by discounted real estate. This strategy, once thought exclusive to the wealthy, is within reach for anyone with earned income. Let's work together to turn this knowledge into a chance for financial stability and legacy wealth. Private lending allows anyone to sit in the banker's chair. Now let me show you a couple of case studies that'll illustrate how it works. One of the primary benefits of private lending is we get to collaborate with professionals. We profit from their expertise, labor, business connections by funding their projects. Here's an example of a deal of a team that I was a part of that we did recently. We received a phone call from an investor in Morro Bay, California. She had purchased a property at a foreclosure auction. She paid $700,000 to buy a little house. Now here's her dilemma. She wanted to tear down the garage to build another house on that side of the property, but she only had $200,000 left after buying the house. And so we decided that we would do a deal with her. So we loaned her $400,000, which she used to build a lovely 2-story house right where the garage used to be. Now, the reason she built it 2 stories is because in Morro Bay, from that site, you have the view of the Pacific Ocean. You see some of the most breathtaking sunsets imaginable. Now, that new house appraised for $1.5 million. Now, that's a far better use of that land than a garage. Now on this deal, we made $42,000 over the span of 9 months by lending them our money. Now while they were out there dealing with the inspectors and dealing with the contractors and dealing with all the things they have to deal with, we earned $42,000 while practically on vacation. Now here's another deal that we profited from. We got a call from a couple of investors from Florida. They needed $150,000 to buy a small house. They only had $100,000, so they were $50,000 short. They reached out to us, and we said we liked the deal, And we knew that if we loaned them $50,000 and they didn't pay us, we get to take the house. So then we would own that house for $50,000. The risk was very low, hardly any at all actually. So we loaned them $50,000 and we said, you guys are going to have to pay us 9% interest to use our money for the next 5 years. And in 5 years, we want all the money back. And so we agreed that they would pay us $4,500 a year for 5 years in a row. So over the next 5 years, they paid us $22,500. And then they gave us back our $50,000. We collected $22,500. No tenants, toilets, or hassles. Didn't interfere with our work or family life. No sacrifice. It's all good. It's all good. Here's a situation where we were the investors. The lender that held the mortgage on this property offered it for sale. They wanted $47,500 to buy their position. Problem was, we weren't liquid at the time. All of our money was out working. Obviously, we could have gone to a bank and borrowed the money, but our thinking was, rather than making the banks richer, why not collaborate with someone that we knew? Because after all, someone was going to make a profit off this deal with us. So we reached out to a guy that we knew had money in a retirement account, and he agreed to be our private lender. We agreed to do a 10-year deal and that we would pay him $3,800 a year to use his money. Here's how the deal worked out for him. So he got $3,800 a year. Over 10 years, that would be $38,000. Think about that. His retirement account grew from $47,500 to $85,500 without him adding a dollar of his own money. Is that a good deal for him? You bet. But that's just the beginning. Remember, I said that a private lender should think like a banker. Now, what would a banker do with that $3,800 every year? Of course, a banker would lend it out and start making money on that money. Albert Einstein is reputed to have said, the most powerful force in the universe is compound interest. Now, I can't say for sure if he really did say that, but if he did, all I have to say is, brilliant. Now, let me show you why I use a strategy called money in motion. It is the foundation of extreme wealth building. Let me show you how it works. Let's look at the previous case. He lends $47,500 and collects $3,800 a year in interest. Suppose in year 2, he were to lend out that $3,800 at 8% to an investor. During that year, he would collect $304 a year on that money and $3,800 on the original loan. That would give him $4,104 that he could lend out in year 3. During year 3, he would collect $328 plus $304 a year plus $3,800 on the original loan. That would give him $4,432. If he were to cash in his investment portfolio in year 10, he'd collect $94,953 in loans. Plus, he would have collected $55,049 interest income, and so his retirement account balance would not be $85,500 as we originally projected. His retirement account balance will be a whopping $150,002. That is a 316% increase over the $47,500 that he started with. 316% increase in only 10 years. This is exactly what banks do. You can use private lending to grow your retirement account and savings account quickly and safely. Perhaps now you can understand why I recommend that you learn to think like a banker. Banks don't invest. Banks lend. Because when you lend, profits are not tied to market. Profits are generated by a legal and binding contract that is secured by valuable real estate, and when you implement the money in motion strategy, you experience extreme wealth building. And best of all, anybody can become a private lender. Are you ready to change your financial future? It's your move. Ready to take the step toward financial stability and building legacy wealth? Whether you have a retirement account or savings to work with, get back to the person who told you about this opportunity. Alek or a team member will answer any questions you have about this brilliant strategy and show you how to get started.